All right, welcome to this explainer. Today, we're diving straight into a fascinating, highly complex, and honestly pretty unorthodox financial subculture. We're going to unpack a sprawling legal theory where everyday citizens attempt to legally hack their relationship with the government, banks, and major corporations. We're going to map out the exact mechanics of how these speakers view the world, relying purely on the incredible claims made in our source material. So, what if you were the creditor, not the debtor? Imagine that for a second. This explainer explores a radical legal framework built entirely around one core premise: that ordinary citizens are not actually in debt, but are in fact the source of all societal credit. In the standard view of economics, you and I borrow money from banks or owe taxes to the government. But what if that was a complete illusion? This paradigm flips standard financial reality entirely upside down. Our source material features a speaker who makes exactly this claim, arguing, "I'm never a debtor, I am the source of the credit." It's an entire worldview built on the wild conviction that the system actually owes you. They assert that citizens have the inherent power to assess taxes rather than just pay them, arguing that every single time you sign your name, you are essentially authorizing a brand new issue of credit from the Treasury. To make sense of this sprawling ideology, here's our roadmap for today. We'll be looking at 1. The source of credit. 2. The paperwork arsenal. 3. Fighting property foreclosures. 4. Assessing corporate taxes. And finally, 5. Navigating the tax court. Let's get right into it. Okay, part 1. The source of credit. Before anyone starts filling out forms, they rely on a very specific view of history. The theory goes that the United States actually went bankrupt way back in 1933. The speakers claim that because the government couldn't pay its debts, it lost the authority to issue real currency. And as a result, everyday citizens, via their social security numbers, unknowingly became the actual underwriters of a bankrupt system. In this view, massive entities like the IMF and the World Bank, they're seen as just corporate strawmen, hollow fronts operating entirely on the stolen credit of everyday people. This means completely redefining everyday life. Under this paradigm, buying something as simple as a pack of gum is viewed as paying an excise tax to a bankrupt corporation. They argue that because we don't have real money anymore, only treasury notes, literally everything you buy is just you paying a tax to acquire the legal title to that item. And since you're the true creditor of the nation, they believe you can legally demand that gum tax right back. Moving on to part 2, the paperwork arsenal. These folks don't fight with lawyers. They fight with tax forms. Take the standard IRS W-4. Instead of just telling your boss how much tax to withhold, they completely reimagine it as a weapon. They fill out the W-4 to essentially draft or authorize the transfer of credit from a corporation straight back to the IRS, claiming it as their own personal withholding. And it's not just taxes. In this framework, filling out an application to get your water or electricity turned on isn't just a basic request for service. It's treated as extending an Article 5 letter of credit. That's commercial law jargon for officially funding the utility company's account using your inherent credit. By simply applying, you are the one funding the corporation. To weaponize these documents, the speaker lists a highly specific set of phrases they literally stamp or write onto everyday bills and receipts. They use them like legal incantations. They'll write exempt on specific W-4 lines, endorse bills with pay to United States Treasury, and even physically stamp phrases like given for a patent right onto their water bills. They genuinely believe these magic words transform standard mail into powerful, negotiable financial instruments. All right, part 3, fighting property foreclosures. Let's look at a real-world application from our source, defending against a property foreclosure. The speaker outlines a wild step-by-step procedure. It starts with a legal maneuver called a quitclaim to essentially return their mailing address to the city. They literally tell the municipality, "Take this address back, I don't want it." Then they dump the parcel ID back to the county and refile their deed using metes and bounds. That means they only claim the physical, historical measurements of the dirt itself, completely rejecting the modern legal address. Then, to handle their mail, they suggest creating a fictitious business entity, like a DBA, just to rent a P.O. box using that discarded parcel ID. In their view, this brilliantly decouples the human being from the taxable property entity. Just imagine telling a bank that can't take your house because, legally speaking, the house doesn't have an address anymore. According to the speaker, this bizarre loophole actually successfully halted a foreclosure. Which brings us to part 4, assessing corporate taxes. How does all this theory apply to, say, a trip to Walmart? Well, the speaker shares a story from the pandemic when a big box store ordered them to wear a mask. Instead of arguing with the greeter, they just complied. But internally, they framed the mask mandate as an employer order, essentially making them a de facto employee. They then literally invoiced the store for the goods and services they provided by wearing the mask. And when the store inevitably ignored the invoice, they assessed that unpaid value on a W-4 form as withheld pay. And the invoice they drafted for wearing that paper mask? $15,000. Yeah, you heard that right. They submitted this $15,000 invoice to the IRS as unpaid wages, claiming the store now owed taxes on it. Because the store supposedly withheld this pay, the speaker claims the store owes taxes to the IRS, and they themselves can recoup the rest as a massive tax credit. They apply this exact same logic to paying the electric bill, relying on a deeply unconventional take on double ledger accounting. Let's break it down. They claim that the utility statement you receive in the mail is actually a positive credit you've created. When you pay the bill, you're just returning the principal to balance the ledger. By their logic, they add both numbers together, the statement amount plus the payment amount, to calculate a massive fictional surplus that they have supposedly loaned the utility company. Then they try to recoup that surplus through the IRS.
Finally, Part 5, Navigating the Tax Court.
So what happens when these wild filings inevitably hit legal roadblocks? Well, in standard law, a dismissal for failure to state a claim simply means the judge threw your lawsuit out because it's nonsense. You have no valid case. But in this paradigm, absolute defeat is magically reframed as total victory. They believe that by dismissing the case, the judge is actually coming off the bench to act as a trustee, quietly agreeing with the citizen that no valid claim or debt ever existed in the first place. The speaker's core strategy here is to literally never argue, just agree with the adversary. They treat court orders not as binding legal commands, but as open business offers. If a judge dismisses a case, the speaker simply files paperwork accepting the offer to close the loop on their own terms. It's a bizarre kind of legal jujitsu where you simply cannot lose if you just completely redefine what losing means. Now, surprisingly, throughout the source material, the speaker insists this whole labyrinth of paperwork isn't just some selfish cash grab. They genuinely see it as a noble quest. By filing these endless W-4s and 1040s against utilities, banks, and retailers, they view themselves as modern-day Robin Hoods. They truly believe they are forcing massive bankrupt corporations to pay their fair share to the IRS, single-handedly lowering the national deficit. So we've unpacked this highly unorthodox ideology, from its alternate history of 1933 to its incredibly intricate paperwork strategies. It presents a totally alternate reality of commerce and law, but it leaves us with one crucial lingering question. Are we looking at a brilliant deciphering of an invisible bureaucratic matrix, or a highly dangerous misinterpretation of basic financial reality? That is absolutely for you to decide. Thanks for joining me on this explainer, and keep asking questions.